Welcome to Crypto Talk Radio, the podcast for everyday investors like you. Visit us on the web at cryptotalkradio.net. And now, here's your host, Leister.
Thank you for that, Bailey, and welcome everybody out there in Crypto Talk Radio, found at cryptotalkradio.net. DMCA was the case that they gave me, although it's easy work to defeat frivolous cases. Welcome back if you've been a listener of the show before, cryptotalk.fm. Welcome if you're new to the show. For whatever reason, it feels like we ain't talked in a while. I know that's not true, but it feels like it's been a long time. I think it's just age. You know, you get older. Seems like time's velocity shifts. Sometimes it's fast, sometimes it's slow. I don't have an explanation for that. Personal updates. I got an electrician coming tomorrow. He's going to be installing a smart home panel from EcoFlow. I have not been paid by EcoFlow, but I'm going to give them a shout out for their products, except for the new Delta 3 Max. It's garbage. But all the other products, the Delta 2 Max, I think is great. Delta Pros are pretty good. And I am very close to being off grid. First step is to get off peak. Load shedding is what it's referred to. Second is off peak. So I'm very excited about that. That'll be going in tomorrow, this panel. What the panel is going to do is it's going to allow me to put all the rest of the overhead lighting, the HVAC system, all the other stuff that's currently not covered by stored power will be shifted off. And if there's a power outage, which there tends to be a lot of out here, because these numbnuts refuse to bury the power lines, it means that I'll have power and my stuff will be lit up while the whole neighborhood is dark. It's going to be great. So looking forward to that tomorrow. That's sometime, I think he said 8 o'clock he's going to be here. And he's got an all day tagged. And then we got to check some breakers because I don't think they're correct. So I'll be in and out with that guy. And then I got some work stuff. Cryptocurrency took a crap, and I had predicted a crap some time ago. It felt like we were running a little bit too hot. I didn't expect it to be so sudden, but it sounds like from some people online that it is not yet over, that there's still a little bit more damage yet to come. We're going to talk about that ever so briefly. There's a couple of speculative articles that I thought were good to cover. So I'm going to dig through those different things. And then, as is the case with me, I am going to go back and talk a little bit more about precious metals because I've been talking about them for a while, long before many of these other people. And I'll continue to do so. I actually just bought some more, and I'm going to talk about that. I was kind of excited on one of them, but I literally just booked an order because I saw that there's some new gold backs in stock, and I decided I had to scoop them up. I had to scoop at least some of them. There's amazing art. Anyway, let's get into crypto. Let's talk about what's going on. Let's take it from there. I am going to use coinmarketcap.com this time and not coindesk.com. You might be curious why. The reason is because coindesk.com has changed the way their graph displays, and it pisses me off, and I find it rather unintuitive, purposely so. It seems like it's designed to get people to FOMO react. I need a clean graph, and so coinmarketcap.com is where I'm going now and probably going forward to get a clean graph. They have a graph right on the deal. You click on whichever crypto that you're trying to look at, and they have a graph right on front. And I am zooming out to the month chart as I normally do, and I want to see velocity and I want to see direction. Of course, as I said, Bitcoin took a crap recently. It was hovering between this 110, 120 range, and then starting just a couple of weeks ago, we started to see that it was breaching down, got to like 110. Seemed to be a little trouble, and I said that it seemed like we were headed downward. It didn't feel like we were strong in what was going on. We did go down to like the 105. People started coming back in to try to hold this, and I said that it seems like there's a battle to try to hold the floor. That's what it seemed like. I couldn't say for sure, but that's what it seemed like. All this happened over the past couple of weeks. But then literally earlier today and late yesterday, it breached the 110. It started dwindling down. It's been dwindling down ever since. Got as low as like 90. I think it got to like 99 for like a split second, bounced back up, hit 100,000, just shy of 101,000 as I record this. But the trend is downward. The trend doesn't look like it's going to continue back up, or if it does, that it's not going to hold. It looks to me like it's going to go further downward Ethereum felt the pain more than Bitcoin because Ethereum had the same drops at points, but just recently went down, almost breached down beneath $3,000. I want to put perspective on this now. Remember that Ethereum was going as low as like $1,200. So if it goes beneath the $3,000 mark to the 2,000 range, 2,000, 2,900, 2,800, I don't know that, like, these are buying opportunities for sure. However, we have to also look at some of the different factors that are causing some of these dumps. I think it's important. And I want to just I'm going to interject this little note here. You might have heard that I was a little bit on edge, to use a term, about certain projects. And I did some audio uploads and I covered those, and I was trying to be clear about what's going on and some of these marks, right? And I said that a lot of these marks, they are the detriment of any project. Idiot Vidlik, he's a mark, right? Well, when you see crashes like this and crap outs like this and loss of value, significant loss of value, these impact not launched projects more than launched projects. When you have a not launched project, remember, they are going off of the idea that you're going to have significant value when they do launch. The only way they're going to get significant value is to be paired to certain tokens that are appreciating. And in these situations where there's a crap out, those tokens are not going to support your token's value, which means your token's value has to contribute more value to the pair regardless of what's going on. So what I'm saying is that if you have a token, I'll just pick on BlockDAG. Why not? You have a token and it's going to launch as an ERC token, meaning it's likely going to be paired to Ethereum. And your whole value proposition in terms of dollars and cents was predicated off of the strength of Ethereum's value, and you haven't launched yet. Let's say by the time you launch, Ethereum's price is in the $2,000 range. Well, that's half of where you were 6 months ago, say. So now you sold people on a certain value proposition 6 months ago, predicated off of Ethereum's value, but now you don't have that. You're half down. That means you got to work twice as hard to get a level of value that's going to appeal to those investors. That's why it's critically important not to cavort, look it up, with marks, and why it's critically important for you to focus on the project and get your stuff where it needs to be, because you have to show value beyond what you're going to be paired with, because you can't rely on those. Also, if you're one of those investors that was sold by various YouTubers that Bitcoin's going to go up and up and up and up and up, and if you were also listening to me saying, I don't support that narrative, hopefully it's clear to you the value of my show at CryptoTalk.fm, that I am not going to tell you that something's going to go up and up and up and up and up, because it doesn't make sense. Even Sailor, MicroStrategy, even he's slowed down on buying. He's buying, right? But he's not buying anywhere near what he was. And the truth is, money's becoming tight all the way around, not just for the big players, but for you and I, right? Because of the shutdowns and the job market and the economy, money's starting to be tight. Money being tight does what? It constricts, look it up, these various markets, and it means that their velocity upward becomes stunted. When the velocity is stunted, it causes fear. Fear doesn't necessarily mean all is done. It's simply, it'll pass, but you have to then get to certain people who are looking for a significant enough discount, meaning that they want it to go to a certain level down, meaning they're likely going to short it until it gets to the point that they want, and then they buy in knowing they're going to get a shit ton of it, so that when it goes back up, they can dump on you again. This is cyclical, which is why I wasn't worried about it, but I expected it because it's cyclical. We were long overdue for something like this because we had run-ups in 2021 and it crapped out, right? So we were long due after the run-ups we had recently for another crap out. It was just a matter of time. And that's where we're at. So I'm not suggesting for a moment that you should get out of crypto or run away unless you really don't want to do it. That's sure. I'm saying that it's cyclical. You have to understand Buy when it's red, sell when it's green. Buy when it's red, sell when it's green. It is not I don't believe it's one of those assets that has stability like the precious metals I'll talk about later. Given that though, I was looking at some on the YouTubers side and they were talking about, well, with Bitcoin, it dropped down. It was like 20 something $1,000. If you just sat on it, you'd been 5X or whatever. Sure, that's true. However, Bitcoin at one time went down to I believe it was like $12,000, $13,000, $14,000, $15,000, whatever. So let's say you had bought 24,000, right? And you bought more when it went down. Sure. Then you sold when it hit 60. You still got that same bump of about 5X that same way without the risk of holding all the way through. Now, some people are just and that's why I say throwaway money. They're just I'll just let it ride. I don't care. It just ride. I'm not going to dump. I'm not going to sell, whatever. That's perfectly fine strategy for those where you're not putting money that you're worried about losing. Sure. I'm more talking about some of these people that are still to this day. I hear it from the block bag spoilers. There are people who basically just YOLO'd into some of these garbage projects with no foundation or basis or truth or proof that it will or won't be something. And I'm talking those should not be, but they are. And what I'd rather see is people are smarter about their strategy. But with Bitcoin in particular, if right now you're still up if you bought in at like $50,000, but you're certainly hurting if you bought in at $110,000, right? However, it's cyclical. Both sides are going to benefit and they're going to win at some point in the future. We just don't know when. You have to understand there's always going to be these ups and downs. It's a normal type of deal. So what happened with Bitcoin? I'm going to focus on Bitcoin because Ethereum, I think, is at this point is being impacted by the Bitcoin stuff. But what happened with Bitcoin really? Bitcoin itself is fine, but what happened is a symptom of the byproduct of the connection of cryptocurrency in general to the larger economy. So I'll be hitting with a lot of terms that may not be familiar to you, and I'll do the best I can to simplify, but I do encourage you to look into this stuff. It's fascinating, but it's diverse. It takes a lot to process all of it, but once you understand it, you realize the fickleness of cryptocurrency and the lack of protections and how that impacts you and possibly your trade strategy. That is, this will be a case for the nth of time, like to your death. This will be the case. It's never going to change. The first, I think the largest impact factor happens due to there's a system in finance, and you may know it if you're a homeowner. You're a homeowner, you've heard the term equity. What is equity? Equity, in the simplest of forms, is how much value do you have? So this is offset value, is offset by how much you owe for said home or property. So if I have a property that's been sold, it's been marketed for $100,000, and I take out a loan for $80,000 and I pay $20,000 out of pocket. Fresh out of the gate, I've got $20,000 in equity because there's $20,000 in value because I only owe $80,000 on a $100,000 home. Now, as you know, the appraisals of said home and the value of said home fluctuates with the larger market. Your neighborhood demographics plays a factor. Schools play a factor. Police plays a factor. Shopping plays a factor. All of these play factors in the value of your home over time. It is never the same number from month to month, much less year to year. In certain areas, the value of your home can be very small because nobody lives there, right? It's a rural area. It's out in the middle of nowhere. I'll tell, back where I used to live when I was a kid, that house, they bought the house for $89,000. By the time they sold it, and I frankly think they got ripped off when they sold it for over $600,000. I'm pretty sure that with the right negotiation, they could have gotten over $800,000. Well, that's a 10x close to what they would have paid for it. But that's because at the time they bought in, nobody was there. This is at a time, just for story history, this was at a time when military shifts were happening. And with military shifts, you get a lot of people coming back from various wars or deployments, and they get stationed at these different places across the nation. Those places, there's a mass influx of these military families. The families used to live, let's say, in the East or in the Midwest or something, and then let's say there's a new stationing in the Deep South. And so all of these military, usually men, come back off deployment, they move their families to this place they just got stationed. The housing market reacts because now you've got all of these families, and let's say military housing isn't there or it's not enough. So the value benefits from that mass relocation and this presence, right? People who were already there benefit from it by way of equity. They might have bought the home at dirt cheap. The person who built the house, they sold it on the open market for $16,000, right? Well, if they hadn't have sold it and they just sat on the house, $16,000 to close to $1 million, like that's the reality of what we had in the housing market. And we're talking decades ago. The point is that equity is that value appreciation and the difference between how much is owed versus what the true value is at any given time. And it's always a moving target. Equity in the financial sector is also part play. So you have these ETFs, right? The ETFs contribute to the value of equity that is available. The equity is partially, not completely, but partially supported by banks. Banks recently were talking about stock impacts. Stock impacts create what? If there's, let's say, an impact in the value of a stock of a given company, well, that's going to have a ripple effect because stocks, they support the value of those organizations. The value of the organizations going down lessens equity. Equity being lessened impacts the use of said equity. So in this case, borrowing and lending for supporting all these different things in the economy. One of those things is cryptocurrency and the ETFs. It's all connected together because the even simpler definition or analogy is you take out a loan to buy crypto, right? That's happening at the institutional levels. That's happening at the bank levels. That's happening at big businesses where they're borrowing money in order to get into crypto or stack crypto or extend these ETFs using crypto as a backer. Sometimes they'll take the cryptocurrency, they'll extend a loan off of it to go and do something else with that money, like I talked about. Well, when the cryptocurrency loses value and then liquidations start happening, what happens? Those get sold, and they usually get sold at the cheapest possible price, which causes price depreciation. My point is that this is a compression, right? It's pressure on the market, the cryptocurrency market, that continually happens until it gets resolved, because it depends on how much of this, and it is kind of a house of cards as I describe it. You're hearing it, you're like, that feels like a house of cards. Yes, it is. That's the reason why the SEC historically has been nervous to open the floodgates for cryptocurrency to be used in that manner, because you have no real protection of cryptocurrency. You still don't. You never did, and you still don't, and you won't. And so you have to, what everybody now is saying is, if you want to get in this, that's fine, but you need to understand it's a wild, wild west. And this is the kind of thing that can happen, which is why you have to be strong enough to accept what will happen. Like that one guy, and he committed suicide because he was putting too much leverage, and this is a Robin Hood thing. He put too much leverage, and the visual on the tool made it seem like he owed millions of dollars when he really didn't. And so he killed himself. That's the reality of the impacts of cryptocurrency when these kind of crashes happen. Because remember, Bitcoin was $120,000 not long ago. Goes down to $100,000, so $20,000 per. Imagine it, and obviously this is not you, but imagine you had 5 Bitcoin, right? That's $100,000 lost in the span of a day. You wouldn't see such a thing anywhere close to that in the stock market or your 401ks or any of those. Why? Because they have the halting. They have the day trading. They have all these layers of protection designed to insulate from those significant dips and crap outs because all of those different asset classes support the business operations. All of that is actually supporting a business. There's borrowing that's happening under the hood, and that would have a significant damage on the larger economics. This is why people are now looking at, when you see some of these articles and they're talking about the institutions are in crypto, there's no looking back, Bitcoin's going to take us to the future, don't sell, I'm not going to tell you what to do, but you have to realize that underneath all that, you still don't have any protections in crypto. That's the difference between crypto and other asset classes, one of which I'll talk about in a second. Crypto doesn't give you protections. It has to be money you're okay losing, because that's a real risk. Now, is it a permanent loss? No, it's an impermanent loss, it's referred to, but that could be impacting for some people. Some people, that's money they could rely on for something else for their family or something else. So point, equity, banking, lending, ETFs, all of this ties together. The ETFs had a lot of outflows as a result of everything I just described. Another factor I just alluded to, leverage positions. So people that are going long, significant long, the Bitcoin's at 120, I'm going to go long, so I think it's going to hit 130, and then they get absolutely liquidated because of all these different disruptions. They don't know. They think it's gambling, right? They think it's going to go up, and it's not really. Leverage always is going to have a major impact on cryptocurrency prices simply because of how it works. You're going to have major shifts in price simply because people are gambling. They're gambling like crazy. Another impact that was not a direct impact, but indirectly might have played a factor in, from a sentiment perspective, Balancer V2. Balancer had a hack and exploit millions of dollars. It wasn't significant, but still sentiment-wise, when you see that as well, like major players getting breached and hacked and millions of dollars flowing out over here, and MicroStrategy cutting back on their spend, and you see all these liquidations happening here, ETF outflows, all of these create negative sentiment. That's why you see the so-called fear index. Negative sentiment also plays. So you could have where 50% of this crap out was the technicals that I described in the economics, and the other 50% is simply fear. It's just people that are reacting to what just happened. And so then they choose to just fear dump out because they're trying to hedge their bets and cut their losses. There might be people who put on theirs, you know what, I'm putting a bottom bet that this is going, if it hits 110, sell it, because they see it's going to go way further down than that. And then they might have a buy order at like 95,000 or something because they know it's going to go back up. There's those. So that's why it's a wave. It's ups and downs because there are all these different things at play. That's what's happening here. We're talking $1 trillion in value just because of all these different things I'm describing. I say all that because I want you to understand why, when I say diversity in your portfolio is so mission critical. It's vital. It always has been. It's never going to change. It's always been mission critical to not go all in on cryptocurrency because you can't bank on it. You need to have diversity. You need to put multiple different asset classes together into a portfolio, because if you don't do it, then you're just going to freak out when you see something like this. There are people who are just crypto gamblers and don't care. I hope that's not you, but it might be. I'm going to encourage you not to be that kind of a person. Now I'm going to leave for the last part of the update. I am going to once again talk about precious metals. Why? Because precious metals are one of those asset classes I firmly believe is strong value in a diverse portfolio. I don't think anything's changed, and I think it'll continue to be an amazing addition to your portfolio. I'm going to strongly recommend you get into it. When I say precious metals, I'm not specifically talking about gold, although gold is one of them. I'm talking about any of the precious metals, including copper, by the way, any of the precious metals, gold, silver, palladium, platinum. Okay, those are the four big. I think copper should be in that conversation. Copper is not going to make you any kind of wealth in your lifetime. And you're like, well, then why would you get into it? Because you have to think of the long play, okay? Copper is fundamental to every single bit of technology you can think of. Every single bit of technology that you see around you, every single bit of technology that powers all of the different smart technologies, all of the different servers that run the AI, all of the different nodes that support the blockchains, every single bit of technology in your cars, every single bit of technology in our planes, every single bit of technology in our boats, every single bit of technology in the restaurants that you go to and all the tech they use, from lights on down. Copper is fundamental to everything that we do. Now, copper happens to be fairly ubiquitous at the moment. It's easy to get, it's easy to work with, and it does so much, and it is central to what we do. I'm saying that there will come a time in a very distant future that copper won't be as readily available as it currently is. Well, you're like, well, how can that be if we recycle? We do recycle. And when the recycling happens, we take the copper, we melt it down, and we reuse it. Absolutely. But also what happens is we are introducing more technology than was the case before. The reason that we have a surplus of the copper now is because we've not determined all of the different ways it can be used to support what we're doing. And I suspect, and I'll be long dead before I can prove this theory, that there will come a time in a distant future that copper's value will minimum 10x from where it is. Right now, you can buy a lot of copper for a very little amount of money, but the slimmest bit of copper, I think is about the ounce, is like $2.50, I think, last I checked. You're like, well, that doesn't feel like it's worth even looking into. I understand why you feel that way, but just to put in perspective why I'm saying this as I am, let's assume I'm right. Let's assume that copper does a 10x from where it's at. Okay. If you were to, you can get a significant amount of copper, easy, for your $100, $1,000. I'll say $1,000. Okay. Now that copper from a weight perspective is probably not, you probably can't sustain that in your household. Maybe you have a vault in your house, but you probably are not going to have the actual copper. But what you can do is you can invest in the copper, but have somebody else be the custody of it. Now, there are very limited, there's not a lot of them, services that offer that for copper. They do offer it for the other precious metals. Copper is the exception. So then what I say is, okay, well, don't worry necessarily about getting $1,000 worth of copper. Get enough copper that it makes sense as just one of the other diverse sets. So if an ounce is $2.50, let's say, so 5 ounces will get you for $10. Okay. Consider getting a 5 ounce. Get a 10 ounce. A 10 ounce is $20 or whatever it is, right? A 5 ounce. Get a pound. A pound's not that bad. A pound's $23, $25 or whatever it is. And just sit it, right? Just sit it off the side. Now, over time, you have it as kind of this foundational part of the portfolio. This is what I'm trying to get across. Let's assume that I'm wrong. Let's assume that copper does not significantly appreciate. If you've bought this copper, it's still going to be that same value. It would not have been disrupted, right, by what's going on with the whims of crypto and all the other stuff. And if you think of silver recently, I think it went up to like $56 an ounce. Currently at $47 an ounce. It went down. Platinum, I think it was up at like $1,700. It's currently at $1,500. Palladium, I think it was like 14 and a half. It's like 14. It might have even gone even higher. Gold it was like 4,200, 4,300 some odd. And now it's down to $4,000, but it's climbing back up again. These have some volatility, nowhere near what crypto does. But copper, if I'm wrong, right? I want you to compare the two. If I'm wrong, copper with its value stability, you could do no worse than simply say, okay, boom, a pound, $23, a pound, $23, a pound, $23, a pound, and just accumulate pounds of copper. Just accumulate it. That, get some nice looking ones, get some fancy ones, get some whatever, and just accumulate it. And that becomes your stable asset. that supports your portfolio's stability. I would absolutely not tell you to get the vast majority of it, because again, you can get a lot of copper on the cheap, but is it sustainable to have that much heavy metal sitting around the house? Probably not. But you could have enough, maybe 10 pounds of it or something that is a stable asset in a diverse portfolio. I'm talking in the context of a diverse portfolio. So that's my sales pitch on copper. It's take it or leave it. It's up to you, but I strongly recommend all of them, but include copper in your thought process, because although it currently is ubiquitous, I suspect at some point it won't be. And if I'm then right, so now compare against what I said wrong. If I'm wrong, now if I'm right, okay, you would have had this stable asset that might even surpass something like a platinum, because platinum's use case is not what copper's is. Doesn't mean that either are bad assets. I actually just bought some palladium. Palladium was really difficult to get for a long time. It just kept going out of stock. They've done better now. I noticed that they have more bars out there. I don't do coins, by the way. I don't know what it is, but I have this weird thing about coins that it just, like, they'll sell the old silver dollars, and I'm like, I know it's silver, but I had crap tons of silver dollars when I was a kid. And yes, I'm sure that the ones I had when I was a kid are worth a mint now, but I didn't keep them. But they're still silver dollars. It's hard for me to reconcile coins versus bars. I like bars. So I just got some palladium. It's en route and at some point should show up. And now they're back in stock. They've got the 100 gram. The ounce palladium is almost never in stock, which pisses me off, but it's expensive. But I wanted to get at least some. I didn't need to have a significant amount, but wanted to get at least some. So I got some of that. I have an ounce. I think I have an ounce bar of platinum. I believe that's what I have. I'm pretty sure it's an ounce. Yeah. Ounce bar. Yes. No, wait a minute. Do I have an ounce bar? I got to double check. No. I have a gram bar. It's a gram bar. The reason it's a gram bar and not an ounce bar was because of the price at the time. I had other things that I wanted to buy that I'll talk about in a second. Yes, it's a gram bar of platinum. And then silver, I think I have like 10 ounces or something, because silver was on the cheap and its price was going down. So I'm stacking some more. And then gold, I've got a couple of grams because they came with a special, it's called a gold note. Yeah. And then I got a whole bunch of gold backs. And the gold backs I have for collectibles. Mostly. The Arizona just came out with their collection. So I just bought some Arizonas. I don't have Utah, don't have Nevada, don't have New Hampshire because art's garbage. Don't have Wyoming, art's garbage. Don't have South Dakota, art's garbage. I do have Florida, and I do have Oklahoma. Yes. And then I just ordered Arizona. And then at some point, I'm going to get some more of the higher denominations of some of these, just to have them. But yeah, I buy gold notes for the artwork. I like the art. At the same time, they're gold, so it's collecting, stacking gold. You can get them cheaper than gold bars. They, for me, from an appearance perspective, I think very highly of them as collectibles. I don't think of them as consumables, although they are. I think of them as collectibles. These are part of, and this is why I'm telling you, these are part of the portfolio. I have digital stuff. I have stocks. I have, all sorts of stuff that's digital. But I also have physical assets, because you can't, if you just go with the digital only, you could lose in a minute. A. B, when you have, because like take the IRS. They used to have a thing where you could get paper bonds. And I think it was Series E or Series I or something. You get paper bonds from your tax refund. So they would mail them to you. And so you had the physical asset and they would appreciate. So I had some, I'll tell this. I had some a while ago and I had them for years. And then when I had my financial stick and it was bad, I had to cash them in because I had no choice. And plus they weren't going to get, you don't get a lot of interest out of the bonds. So I traded them in. I got the full cash payout. It wasn't a lot, but having the bonds, to me, that was the feeling of having the physical asset as opposed to relying on some digital something where it could be lost at any moment. Everything in precious metals, now we're seeing that precious metals, as before, but certainly now, are starting to absorb a lot of what's happening from crypto. So that's why I went roundabout to tell the story to help you understand. It all, no matter what happened, like crypto, Bitcoin dropping $20,000 of value. Meanwhile, gold is up. It's back up again. The gold did not significantly drop in value when what happened to crypto because all of those are, I don't want to say containerized, but they're very isolated economic impacts. They are all kind of connected, like a house of cards in a way. These 5 event things are all going to eventually end up killing crypto, right? Killing in terms of the short-term price. They're going to crap. When you get rare metals or precious metals, they don't get that level of disruption. They simply don't. People that own them generally don't sell them en masse like that. And you might have people borrowing against it. So there are liquidation activities that happen with gold. But when those happen, a lot of those loans and borrowing and leverage and everything else is not so substantial. Like you don't have somebody that's going to go long on gold to $5,000, right? It just doesn't happen. They're going up by shorter, smaller increments such that the liquidations don't have the same damage. With Bitcoin, it's truly casino because you've got people that think, yeah, it's going to go $10,000. And so then when it doesn't and it goes the opposite direction, the liquidations are substantial. There's also manipulation. We know that in crypto. The manipulation causes what? Fear to be multiplied. There's more fear because the manipulation has caused significant price shifts as opposed to just kind of comfortable, natural, normal price shifts that you see on precious metal sides and regular assets, stocks, and bonds, etc. Real estate is another asset class that I think held the line really well. We are seeing that the rates are somewhat coming down. I still think they're grossly overinflated. We should be at rates no higher than 3% by now, and we're not yet. Once we do, I do plan to look into refi, but I want to find a lender that doesn't need to do the appraisal or site or the pest or any of that kind of garbage because just offer it based on fair market rate and let's make it happen. And I would consider it. But equity, I have to decide what to do with it because my value has significantly increased. I guarantee this. The closing message. What happened today or this past 24 hours, what happened with cryptocurrency not only was bound to happen, it's bound to happen again and again and again and again. And nothing's going to change the way that crypto behaves because we have paired it to fiat. The moment it was paired to fiat, it created a trap where you have to make decisions, hard decisions. You either stay in it because you're so fervent of a believer and you never sell and you might actually win someday, or you take profits as you run into opportunities where it gets to a point and then buy back in off the dip, strong dip. No problem. I'm never going to tell you not to look into crypto. I've said, there are certainly opportunities out there. I say, and I want you to compare my message against other people out there. I say cryptocurrency should be one type of asset in a diverse portfolio. And you should not YOLO into, for any reason, cryptocurrency. I maintain that. I always will maintain that. What you choose to do is entirely up to you. But I believe cryptocurrency is one of those where you should look at it as one asset of many. Underneath it, look into stable assets. Look into assets that are not going to lose their stability. Cash is not a stable asset, believe it or not, because they're printing and printing and printing. So putting it in a savings account doesn't do you much good because the rate that they offer you is garbage. Same with checking accounts. Yeah. Same with CDs. The rate's garbage. And even with the rate, by the time you get what they're offering you, it's already devalued such that you didn't benefit much. That's why I told the story about copper as a foundational asset that is inexpensive to get into. It is largely stable. It is expected to appreciate in the long term, but it is not expected to crap out in the short term for any reason, making it a really good stable asset. And many of the other precious metals make good, diverse assets for a portfolio. To insulate from a total investment perspective from the damage that we see cryptocurrency can wrought on people. Once again, entirely up to you and what you do with your cash and with your time. I would say if you found a blend of assets that works for you and you want to help other people with something that has worked for you, and I'm not talking gambling, I'm talking stability, I'm talking comfort, peace of mind. CryptoTalk.fm, hit the contact form and let us know, or comments wherever this posts. Let everybody know. Share your story about what you have invested that has been beneficial to you, that has been something that has helped you that can help other people. Because everybody needs that advice. The more that we share the advice, the better off we all will be in the long run.